Please welcome Mark Fiorentino from Index Ventures, Emmalyn Shaw from Flourish Ventures, and Jillian Williams from Cowboy Ventures, along with our moderator, Ingrid Lunden.
Hello. Hey, can you guys hear me okay? Good afternoon. How is Shaq? Okay, so thanks for being here with me, you guys, and for coming to Disrupt. We'll just go right into it. So this is my second time on the stage today. And earlier today, I was interviewing Zach Parrott from Plaid. And it was kind of fun because he launched his company at a Disrupt hackathon 10 years ago. It's amazing. And so he's back here now, which is incredible. And what he was saying was really interesting. He said there was a very, very scrappy time because it was basically impossible for him to raise money. You could not get in through the door at a VC with a fintech startup 10 years ago. And obviously things have changed quite a lot since then. So I kind of want to start out with that question, how are you seeing things evolving and where are they now? And that is to any one of you. We've got Mark, Emmalyn, and Jessica, and I know any of you are totally well equipped to answer that question, so just launch in. Go for it.
All right.
Yeah.
Loaded question, but I think,
yeah.
I'd almost argue that even rewind 10, 12 years ago, almost the term fintech almost wasn't even a thing, right? It's like I'm a technology and I work within the financial realm, and now it's so ubiquitous and such an interesting category that permeates everything from I'm a vertical SaaS company that needs to process payments to I'm pure infrastructure to I'm a consumer-focused thing where I'm holding a card in my hand. And I think that's the most interesting part about fintech is how much it's permeated throughout our everyday lives, whether business or consumer-oriented. Maybe one comment, and there's a lot to say in this, so I'll keep it to one, but I think the interesting part about where we are now in the market is that even though, maybe you could argue that there was a bit of a peak of fintech 2 years ago, a lot of people were building in the space, so much capital was flowing into that industry, there are still a lot of great startups being built in that space, and I think the most fun part for me on the investing side is that I'd say the tourist investors that have now moved on to another hype-driven category are gone. So actually there's this interesting supply-demand disconnect where we actually I think there are more interesting companies to look at and less people sort of really focused in believing in the space. So it creates kind of a great dynamic for, I think, people that truly believe in and the trust in that space. So I think if anything, that's my bullish view on why it's an interesting space to build in, but you've separated out a lot of the tourism from that perspective.
Yeah, I love the phrase tourist investor. Well, look, following the tourist investor metaphor, Emmalyn, what do you think started to gentrify the world of fintech? Like you said, it didn't even exist as a term. There were financial startups. And I think of companies like Stripe, where you worked, of course. That really, I think, must have changed the whole kind of conversation about, there is a possibility here. I think it was that vast success of PayPal, which technically wasn't even thought of as a fintech, weirdly. But I think people just thought the game was over, right? But what do you think happened that changed the whole scene? Because, I feel like that's really instructive right now, because I feel like we're in a bit of a bear period now. So, yeah.
I would argue, the first generation of financial services, you think about financial engines, right? You think about some of the massive transformation on the data side, Yodlee, others. I think Intuit, right? I think when we think about what financial services was back then, we were just scratching the surface in terms of really being to innovate, really meaningfully reimagining infrastructure, reimagining vertical SaaS, embedding financial solutions into some of these platforms that have never had the ability to offer financial services with a compliance focus. So we're just in a different era of innovation that is, and I think Plaid actually was one of the most interesting of that in terms of contributing to this idea that, wow, you could just take and expose data sets, financial data sets, and meaningfully drive market adoption by fintechs that would otherwise not have any access to these, and to be able to do it quickly and seamlessly. And to me, taking the Yodely approach, but really up-leveling that in a pretty considerable way,
Yeah.
opened the door to so many transformational pieces, particularly in infrastructure, in a way that we hadn't seen before. I think before that, you'd seen a lot more innovation around direct-to-consumer, a lot of innovation around, challenger banks and the like. We were early
Yeah.
in Chime, so seeing some of the players happen then. But I think with each successive opportunity, infrastructure has really started to open what I characterize as the next generation of opportunities, specifically across payments, lending, embedded finance. And to me, that's where we're starting to see a lot more innovation.
Yeah, so I mean, Jessica, I
Jillian.
Sorry.
Sorry.
I said that backstage too, didn't I?
It's all right.
Why? You must look like someone I know. I'm so sorry, Jillian. So the thing about like all of this was unlocked suddenly, and like he was saying he couldn't get the door open because everyone was like, how are you going to work with banks? There's just no way they'll ever work with you. So there's no credibility here. I mean, I feel like that turned into a real kind of gold mine for investors to really, there were so many opportunities. As you say, there's so many things to fix. Nowadays, though, would you say that like the sun is set on that golden age, or are we still there?
Not at all. I think that there's just been a lot that's shifted. I think like from the perspective of working with banks, actually, I think it was last week that JP Morgan announced that they're actually working with Gusto in terms of powering payroll for their small businesses. So like, I mean, 10 years ago, you never would have thought that JP Morgan would have worked with a startup. Like they were one of the most against working with startups. And so I think that there's actually a lot more appetite from the large incumbents in terms of working with the startup ecosystem, because I think they've realized a lot more of like the openness to actually working with tech and realizing what some of the limitations are in terms of them being able to do it themselves. And so I think there are a lot of aspects of the ecosystem that's continued to change in that aspect. But I think sort of similar to the entire tech ecosystem, especially the last 2 to 3 years, like there was just a huge bubble, and obviously fintech was part of that bubble as well, just in terms of the demand and money coming in. And I think also like with COVID, like people couldn't go to banks and things like that. And so fintech became a lot more mainstream as well, especially on the consumer side. So you saw huge tailwinds in terms of growth of a lot of these platforms. Like Emmalyn said that Chime existed, but honestly, outside of some of the coasts, probably a lot of people did not know what Chime was. And then all of a sudden, it became a lot more of a mainstream entity. And so kind of to have a lot of those tailwinds, there was a lot more money just kind of going into fintech more broadly. And I think that now that that's kind of coming back a little bit, just in terms of both like the tailwinds behind COVID, as well as just understanding like what is actually necessary in this space and what is actually sort of like competitive, like what do we need? Do we need another bank versus these large entities, or do we need more infrastructure, or do we need more like enterprise tools, and like kind of figuring out what is actually needed within the space versus what is kind of nice to have. I think that's kind of being figured out versus for a while it was just like anything with that could potentially be fintech, we could put money into.
Have people gotten a lot more conservative in that way? Well, investors, I mean, actually even founders. Are you seeing a kind of a less varied amount of ideas coming to you now for investment as people try to kind of move to safer moats and more sure bets? Or, like it's just really tough because, I mean, you love to hear about, Google was founded at, like a, really low point in the technology market in the industry. I mean, so you would think that actually right now might be when you're seeing the most creative ideas if you follow that through. But I mean, but then again, I would think that investors are much less keen on investing in this kind of thing, as Jillian just said. So, where is it sitting now, do you think?
Maybe one thing I'll say on this is Jillian mentioned understanding as part of that. And so I think one component here is there's this fundamental understanding of, as a lot of the fintech companies from a decade ago, 5 years ago, are starting to both trade in the public markets. Their financials are starting to be more publicly available, and people are kind of piecing together not all fintech companies are created equal from some are SaaS revenue, some are payments revenue, some are lending businesses. Those are all fundamentally different business models.
Right.
And so one of the things we're seeing now, to kind of bring it back to your question, is when you're a founder and you're starting out, I think we're emphasizing this be very cognizant about the type of business model you are driving towards in the space you're being in, because that will lead to a different fundamental set of way your company's valued. So it doesn't mean that one business is worse than another. It just means you have to have that in mind as you build. And one thing we're pushing our founders on is, make sure as you can execute 7 years at 110% and do everything you want it to do, but make sure you understand how your company will ultimately be valued, because it's building a company is an execution bet and a valuation bet, not just the former. And so I think we're seeing a lot more of that being kind of split out early on now too. And I think I think the second point is there's this hyper kind of focus, right? Even, we have some companies in our portfolio that maybe, raised a round or two ahead of where they actually were from a product market fit standpoint in 2021. So one of the main things we're telling them is, hey, pretend like you have a third of what you have on your current balance sheet, and you're a Series A business. What is the one thing you would do if the other, $30 million didn't exist? And that's kind of forced this, you're kind of force functioning them into the world we live in now, which is, in a market you have to be hyper cognizant and more profitably focused early on right now.
Are you demanding more profitability out of your portfolio companies? I mean, you're so early stage.
Yeah, I would say
There's no way.
I would not say demanding profitability, but I think there was a mindset of we can kind of care about earning money later, focus on the customer for now, and care about unit economics at some point later. And I think that has definitely shifted. I think something that we as a firm have kind of always focused on, making sure that you could actually make money off of something. But I think as an ecosystem, that's become a lot more important, especially just kind of from day zero. And so, I mean, if you looked at a lot of, for example, consumer fintech, there was a huge trend for a while that figure out any way, or even B2B as well in some way, but any way you can make money off of customers without actually directly charging them. So even in some vertical SaaS, it's let's not charge them for the SaaS, have it being free as the wedge in, and let's just make money off of payments. That can scale incredibly well. However, that's very volume dependent. And so if there's a downturn and for some reason businesses are spending a lot less money, you don't have that safety net of kind of the constant consistent cash flow that's coming in, and that can fluctuate drastically. So kind of to Mark's point of the different business models, that can change a lot and really change how you're being measured. And also in terms of margins, a payments margin looks very different from a SaaS margin. And so kind of thinking about those considerations when figuring out what your business model is. And then also, I think it says something personally around if your customer's actually willing to pay. I think that means there's a lot more value in your product if they're willing to pay versus I'll take something if it's free for me.
Yeah, I think the whole kind of move away from everything free, I don't know, there hasn't really been that much of it in fintech anyway. I mean, I think that it's always been much more closely banked to banking, basically. So I would like to ask you guys a kind of general question about fintech investing, which is, without referring to AI, you can't answer AI. What's a hot area for you right now? What are you looking for now? And we had a little chat backstage, and the takeaway we got was boring is big. But yeah, the important things that are may sound mundane. But anyway, where are you guys going? Maybe Emmalyn.
Yeah, I mean, we are a fintech-focused fund, so obviously we're very thematic, and we think a lot of things are quite exciting. We played a lot of bets around infrastructure and the innovation infrastructure, whether that be through payments or through lending, credit, et cetera, and finance, more importantly. I think we stay very excited around B2B payments, very excited around vertical SaaS, specifically those uniquely positioned to embed financial services more readily. Certainly anything transforming legacy infrastructure. God knows that we are still very much working in Cobalt, and the processor and the core are still in dire need of transformation. And then all sorts of data applications. I would say, I would be remiss in saying that we are in an interesting time. I could be biased because I have quite a few Gen Zs in my house, but I do think that demographic in particular is behaving differently. They're mobile first. They behave and expect very different things from financial services, and we might very well be in a position to kind of reimagine a new direct-to-consumer offering in fintech as well.
I think you're absolutely right about that, actually. There's been very little of that so far. Anyway, do you have anything to say, Jillian?
I'd say a
What's
lot of
a
it,
hot area for you now, not AI?
yes, a lot of it's not too dissimilar from that. We focus a lot on the B2B side, so vertical SaaS, a lot of the like unsexy, very boring tech infrastructure as well. Have been spending a lot of time in sort of the compliance space, fraud, risk, et cetera, things that are selling to banks and really helping them upgrade their legacy tech. And so yeah, really kind of like the backbone of financial services. That's kind of a lot of what's been interesting to us.
Okay.
I think, so one area spent a lot of time in the last maybe 12, 18 months is this is what we were talking about, supply chain logistics, manufacturing. There's a lot of interesting fintech applications within that world. I think one instance is actually, if you think about FICO scores, right? So we have a company in our portfolio that's raising right now that focuses on a wholesaler that sells to, think of like, ABC, Chinese restaurant. That person buys from 10,000 units from Coke, and then they need to go buy, a bunch of plastic straws from someone else. Mm-hmm. And what's interesting is the plastic straw company is gonna call up Coke and go, hey, does this person pay their bills on time? Should we extend them net 30, net 60, net 90 days? And then they do that same thing 3 to 5 times in order to basically underwrite an SMB. Super broken and friction heavy process for a variety of reasons that I'm sure you can all imagine. So if there's a way to kind of create and amalgamate that data into a score, that's a super interesting realm. So that's one flavor of like, I think, an application of data and fintech in supply chain logistics.
And that's not something I'm familiar with. Actually, what you've just described, I can't think of another startup that's doing that sort of thing. So that's cool.
Yeah,
that's interesting. Okay, well now I'm going to turn the question around. How important is AI right now? I feel like it's on everyone's tongue. It's a little bit overheated and buzzy in every vertical. Is it figuring strong in how you're evaluating potential fintech investments?
Can I be a little bit provocative?
Yes, please.
So, I mean, I've been
Just
investing.
don't throw water at me.
I won't throw water. She did say she wanted us to disagree. We haven't disagreed yet on the stage. My apologies.
Yeah.
But you know what? I've been investing since January 1st of 2000. AI has been around for a very long time. The difference between where we are today is computing power. We can fundamentally unlock and unleash the ability to have generative AI be more meaningful. And so it's not as if a lot of these companies didn't have AI in their wheelhouse already. In fact, many of our companies, whether it's like Alloy in their RegTech and KYC space, or if it's in the InsurTech side of the house, a lot of them are super core to their solutions. I think the question is, how is generative AI being applied more broadly now? And we're seeing it more back office for us. It's more like, how do you automate? How do you optimize efficiency? How are you engaging more quickly with customers? All of which are important, but it's not clear that there's going to be a standalone AI-specific fintech use case. I think there certainly will be more broadly, but I think it's the jury's out in terms of how much will be embedded within the existing infrastructure players and providers, and direct-to-consumer for that matter. Certainly a lot more interesting solutions can be provided with generative AI, and versus a standalone platform that really is able to serve the needs of the community.
Yeah, Jillian?
Yeah, I agree. I mean, we have a company called Vic AI that we invested into probably 3 years ago.
Right.
And so, yeah, to your point, it's definitely not new, and that's something that we think is super interesting because, they're an accounting firm that uses AI to make make your data a lot more efficient and useful, actually, for CFO suites. And so, that's something where it's they've been training off of this data for years now, and so that's something that we think where it's especially when it comes to private data, they have a pretty good size advantage at that point, and that's something that they just keep doubling down on. But to that point also is we've seen a number of companies within the fintech space using AI that sure can be interesting, but it's more so of features of something, and it's hard to really see them being standalone products, and I think, or standalone companies, and I think that's what's been a little bit more challenging. And really what's been more interesting is speaking to our companies and hearing how much more scale they're getting in terms of using AI to create content for marketing or to make their engineering teams a lot more efficient, and I think that's been really useful versus just the standalone companies.
That's great to hear, actually, because I feel like that would be bad. If people just kept trying to peddle this idea that they're the next big AI company, that would be bad.
Maybe I'll take a step. When we think about AI too, right? You have to be careful in the same way you have to be careful with fintech, where fintech can be sort of an application of fintech within a vertical SaaS company or an infrastructure company. So that you have to kind of break down AI into a variety of things, I think, to have this conversation. And so if you have the bottom of the stack is you have a subset of, there's value will accrue to a small subset of model providers, right? So it's OpenAI, we invested in a company called Cohere, Anthropic, et cetera, and there's going to be a few of those. Then you have this middle layer of we help you transform or extract or do something with that data to make it more useful. And we invested in a company called Scale a while back that sort of does that across AV companies, language processing, et cetera. Then you kind of get to where some of these fintech companies and use cases are on this top layer of, I can take what the model, I can embed that model, use the data from like a middleware provider, then I do something with this, right? And so I think in a lot of these cases, the incumbents with distribution, I think one of you was sort of alluding to this, will likely win in most cases. Like, right, we're investors in Intercom. Intercom rolls out AI, or Pilot, we invested on the accounting side. They have a pretty interesting use case for AI because they already have pre-existing distribution. So then you kind of go, okay, if I eliminate distribution advantage, what is left as an actual investable business? There's a smaller subset. There's a lot of interesting ones, but I think that's a good framework that you have to use to figure that out. One area that's particularly interesting to me, if you run that calculus, is risk mitigation and insurance. I don't know how this is going to manifest itself, but this is something we started talking about maybe a week ago. But if you think about how cyber has grown over time, you had companies like carriers like Munich Re, Travelers, et cetera, that started to dedicate portions of their book to cyber insurance attacks.
Right.
One of the biggest holdups for enterprises deploying models are sort of like the risk mitigation side of it. Now, and if you look, actually, Munich Re spun up their own AI sort of focused carrier insurance product maybe about a year and a half ago. I think we're in the very, very early days of what that looks like, because I couldn't even tell you exactly how I'd underwrite model deployment right now. But there's something in that world that could be interesting as sort of an investable opportunity in the future.
Yeah, I would say that kind of a company probably is one of the few that I would say is a fintech AI company too. Whereas the others just becomes as you say, a feature of the product.
I will say one of the challenges, especially around like the application of AI and fintech, and it depends obviously the application, but like especially with like things being regulated, is that with AI, like you can't just have these decisions made in a black box, because then if something goes wrong, you need to be able to understand like how the decision was made. So if it's like applications within fraud and compliance or even insurance, like if a mishap happens and they need to go back and audit it, like if there's just no real way to actually figure out why decisions if a decision came to that way, like then that becomes a huge issue.
I would take it a step further, which is, and I totally agree with you, I would say that, in general, I think where people have been reluctant to use a lot of these models is because, PII, and we're particularly in a regulated industry. So you think about, like, can we protect the data sets?
Yeah.
Can we ensure that we're actually using them in a secure manner?
Yes.
Are we changing the underlying efficacy of that data? Well, if we oversynthesize, so to speak. So are there ways to keep it safe? And then can we audit what has been changed? How does it get re-injected, the metadata re-injected back in? And so that's an area that could be an interesting use case, particularly as you think about not just today's set of AI models, but generative AI models, but the future set of AI models, and wanting to be actually, optimized across a number of them for a variety of use cases.
Yeah.
And maybe the one other thing I'll say on this too is actually we actually took a survey of all of our fintech companies recently of saying, how do you think about AI and how are you using this? And the one, there was a very big striation between internal use cases and external use cases, and majority of the use cases were pure productivity on the internal side, right? Like, can I make my compliance analyst faster? Can I help do sort of like fraud analysis better for the things that need manual QAs? And all that leads to increased top line, but it's not a customer-facing AI touch point necessarily because of the privacy.
Yeah.
Well, yeah. By the way, I'm writing about a company for a massive funding round for not a fintech, but like a health tech company for tomorrow. Later in the week, and I think that's a really interesting model if you could apply it to fintech, which is that also has massive privacy data issues. And interestingly, this company is building very much from the ground up their own language model. They're not using anything from anywhere else. And that's partly as this way of ring fencing what they have. And then it's never consumer facing. It's something that's used to augment clinicians, basically.
Right.
So it just, I feel like that's the kind of thing you can imagine in fintech, in like a financial model where it's something to help somebody who's working with a customer rather than replacing the person who's working with the customer.
Yes.
Yeah, okay, so what's quite interesting here is that none of you mentioned in the first question crypto, which I've always thought of as a very fintechy kind of area, and is like, thought of as its own salient space. Are you guys looking at that at all? I noticed that you had one crypto company listed in your bio that you partner with, Jillian. But in fact, they've pivoted, so they're not even doing. That's Eigen, I think.
We have it together.
Yeah, we co-invest in that.
Yeah, Eigen. I was like, oh, they do crypto. I looked it up. No, they are no longer doing crypto.
They are not doing crypto. But I'd say my thesis for crypto always was kind of like crypto 2.5-ish, where it's like I have never been someone who's like all in, everything's going to be Web3, but it's sort of like, do I think that people are intrigued enough there is going to be a there, and so what is kind of the infrastructure, what are the tools that are necessary for that space if it's going to exist, to make sure that like exists properly and in the most efficient and safest way. And so looking at tools that help to, whether it's move money efficiently, like I never believe that everybody should custody their own money, because like that is a recipe for disaster. Like I have lost money and I think of myself as a pretty educated person and efficient person technologically, and I have definitely sent money to scammers. And so I think, thankfully not a lot, but I think there are ways in which it's like finding investments that help with that kind of infrastructure around that, and that's kind of always been my thesis. I think right now is definitely a tough time to be investing into the space, because I believe it's going to be a low within crypto for some time, and so part of our job is not only finding interesting companies, but also timing matters as well, because there's a finite amount of money that you put in, and then have to make sure that they can, at least especially early stage, get to that next round and prove out metrics by that time. And so I think timing right now is a difficult thing to really predict within the crypto market.
Yeah. Emmalyn,
I agree 100%, specifically in the US. We have a global fund, but I would say in the US particularly, I think we've definitely been kind of the 2.5, this idea of onboarding. How do you create the picks and shovels to enable crypto and blockchain in particular when it's appropriate? I think in the emerging markets where the financial institutions are much less stable and this idea of remittance is pretty core, I think that's where you'll see more emergence of stable coins and crypto being a more natural point of innovation, and we have made bets there, and we found those to be, quite frankly, slightly more dependable than even some of the resident currency, in part due to the volatility.
Yeah. So I have a slightly left field question for the final one for you guys. It's really funny. I was thinking about what are the big things that have happened in fintech this year that I would love to bring up. And I couldn't believe it, but Silicon Valley Bank collapsed this year. It seems like so long ago, right? Yes. It was such a big deal, and then it finished, and everyone just moved on, and no one talks about it. It's doesn't it feel like it happened a million years ago? It was 6 months ago. Okay, so what was interesting about that was how a couple of fintech startups swooped in potentially to try to pick up the pieces. You saw Brax and Mercury and all of that. I guess my question for you guys is, from the investment point of view of where you are, can you see, first of all, just what are your thoughts on all of that? And is there any kind of hangover from that is impacting where you guys are sitting in terms of companies that you're looking at or evaluating? Is there opportunity there for banks to for fintechs to come in that area and play in that really big kind of banking space? Yeah.
I think from a lending perspective, there's a huge gap that's certainly been left as a result of SVB and others. I think you're starting to see some of these longer, smaller banks try to think about a role that they can play here and step up. I think it's just hard, though. There is a certain risk level and a risk tolerance that I think they need to be mindful of. And I think that has implications in terms of startups. I think from our perspective, particularly in fintech, there aren't, I think as we think about operational excellence and efficiency, I think the idea of taking on debt, certainly at the earliest levels, is probably not where we would be inclined to advise anyhow. And so it really does force more of a alignment in terms of discipline in a way that we didn't have as much of that control or influence when there was so much accessible to them.
Yeah.
And so I think in some ways it aligns us a little bit more, certainly with companies that have assets. And I do think there's a lot more innovation around kind of lending and asset-based financing for companies, and they're taking advantage of that. But I think on a relative scale, the access to the capital at the scale that SVB and others provided just pales in comparison. And there will be some interesting banks that will surface as a result to take advantage of the opportunity.
Do you think it's maybe overall, like, it was painful when it happened, but do you feel like maybe overall it's healthier for the ecosystem that that's been kind of scrutinized and removed and rethought?
I think it was important to have an evaluation of the fundamentals, and I think it was important not to get caught up in the euphoria and hyper growth, and it did instill a lot of discipline. It was also quite hurtful for the community, though. I would say, be remiss in saying that tech didn't have a massive impact in losing a player like SVB, particularly given the important role they played in kind of supporting the ecosystem.
Did it impact any of you and your kind of funds or your portfolio companies much?
No, 'cause, I mean, I guess I would say that, like, mainly the hangover, I think it doesn't necessarily affect fintech more than any other sector in terms of, to your point, like access to debt and so like a lot of companies that maybe had debt before or maybe were planning on raising debt, like that just makes it a little bit harder. There's a lot more scrutiny around it. And that's true of like any company now. And it changes just like how other banks in general think about tech. But like the fundamentals of like what happened with SVB was not necessarily purely because of tech. And I think it couldn't, I mean, it was First Republic, obviously, other ones, like it's not necessarily unique to the tech market. And so I think there is this kind of hangover broadly of like, sure, like, it seems like the banking sector has moved on from it. Is it like fully in the clear, especially as like interest rates continue to rise? Like potentially not, but like it seems like everything's okay for now, knock on wood. And so I think there is this like interesting state that I think we live in, and this is a very different topic, but like in terms of this like uncertainty of like our fuller macro environment right now. And I think like that kind of sits within all of it. But I think overall, like everything was kind of saved. And so I mean, like our portfolio companies, there was like a weekend of hysteria and having no idea what was going to happen, but like our portfolio companies ended up okay.
Yeah, that's good. Okay, we're actually right out of time. It was lovely to have you guys. Thank you so much. Thanks very much. Thanks, everybody.
Thank you.
Thank you.